Hey traders, you're about to learn one of the most exciting and powerful trading strategies out there, the MACD strategy. But here's the kicker. We're not talking about your average MACD setup. Oh no, this strategy has a potential win rate of 86%. That's right, 86%. And best of all, it's dead simple, works in almost any market, and wait for it, it makes money. Sound good? Let's dive in. What exactly is the MACD? Alright, let's break down the MACD, short for Moving Average Convergence Divergence. In plain English, it's one of the most popular and reliable technical indicators for identifying trends in the market. Why? Because it's built using moving averages, and it's pretty dang good at predicting trend direction. If you're already a seasoned trader, you've probably used or at least heard about the MACD indicator. It's like that old reliable tool in your trading toolbox. But here's the truth. The MACD by itself is just okay. Don't get me wrong, it works. But to really unlock its magic, you need a little spice. So, make sure you stick around because I'll show you how to combine it with other indicators to crank up the win rate. First things first. Let's get that MACD indicator onto your TradingView chart. If you're new to this, don't worry, it's super easy. Here's how. 1. Open TradingView and make sure you've got your chart ready. Any asset will do. Stocks, Forex, crypto, you name it. 2. Head to the upper toolbar where you'll see an Indicators button. It's marked by a little FX icon, usually located near the top of the screen, just above the chart area. Go ahead and click on that. 3. In the pop-up window, you'll see a search bar at the top. Type MACD in that search bar. You should see the MACD indicator appear in the drop-down menu. 4. Click on MACD and boom, it's added to your chart. You'll now see a new panel appear below the main price chart. This is where your MACD lines, signal line, and histogram will be displayed. Now that your MACD is up and running, we're officially in business. You've got the tools in front of you, and the real fun begins now, interpreting and trading with it like a pro. Let's decode the MACD. It's made up of 4 main components. 1. The MACD line, usually the blue line. This is often a 12-day moving average. The signal line, typically orange, usually a 26-day moving average. 3. The histogram. This shows the difference between the MACD line and the signal line. The 0 line. This is like the MACD's center, a line of symmetry in your chart. Pretty simple so far, right? Here's a neat trick. When the MACD line crosses above the signal line, the histogram turns green, bullish sign. When the MACD line crosses below, the histogram turns red, bearish sign. Think of it as a built-in weather forecast for your trades. So, how do we use this thing? The MACD is exceptional at finding trends. A bullish signal happens when the MACD line crosses upward over the signal line, especially when it happens below the 0 line. This is your all clear to buy. For bearish trends, the MACD line crosses downward over the signal line, especially above the 0 line. That's your cue to sell or short. But hold your horses. Here's where most traders slip up. They use the MACD on its own. Big mistake. It's great at showing trends, but only when the market is already trending. In sideways markets, it can lead you straight into false signals. The fix? Add a 200-day moving average to your chart. This little addition changes everything. The 200-day MA helps us filter out those false signals by only trading in the direction of the trend. How do you do that? Easy. Add the 200-day moving average and now check where the price is in relation to that line. If the price is above the 200-day MA, the market's in an uptrend. If below, it's in a downtrend. Now, let's get strategic. You want to buy only when 1. The MACD lines cross below the zero line and cross upward. 2. The price is above the 200-day moving average. For short trades, just flip it. 1. The MACD lines cross above the zero line and cross downward. 2. The price is below the 200-day moving average. Here's a great example. The MACD lines cross below the zero line and upward, while the price stays above the 200-day moving average. This combo gives you that juicy high probability trade. To protect your capital, set your stop loss just below the 200-day moving average. Think of it like a wall that your trade has to break through. For profits, aim for a 1.5x profit target, meaning if you risk $100, you're looking to make $150. So, in this example, you've now got a well-protected trade with a solid profit target. And guess what? Boom! The price hits your target, and you've bagged yourself a nice win. But wait, we're not done yet. Why stop here? Let's make it even better. Here's the catch with this strategy. It works beautifully when the market is moving. But when things start to go sideways, it can generate false signals. Nobody likes getting whipsawed, right? To prevent this, combine MACD with price action. You want to identify key support and resistance levels, places where the price tends to bounce. For example, when the price touches support and starts to bounce, it's a signal that upward momentum might be on its way. But don't assume it will bounce every time. If the price breaks through support with momentum, it could keep dropping. Here's where the MACD comes back into play. So, what you do is this. 1. Wait for the price to hit a key support or resistance. 2. Ensure the price is still above the 200-day moving average. 3. Look for the MACD lines to cross below the zero line and then cross upward. When all three pieces line up, you've got yourself a rock-solid setup. This combination of the MACD, 200-day moving average, and price action gives you an insanely high win rate. And that's it, folks. The MACD strategy, when paired with the 200-day moving average and some solid price action analysis, is your golden ticket to consistent trading wins. But remember, even the best strategies need to be practiced and tweaked over time. If you found value in this, make sure to smash that like button and subscribe. I've got even more fire strategies coming up, including one that might just blow this one out of the water. You won't want to miss it. Until next time, stay smart, stay sharp, and happy trading.